Good afternoon and welcome to the presentation of Ignitis Group's results for the first half of 2026. Thank you for joining us today. During today's call, Ignitis Group CEO and CFO will present the group's strategic and financial highlights for the period. This will be followed by a question and answer session. Before we begin, I would like to remind you that today's presentation contains forward-looking statements that are subject to risks and uncertainties. These statements are based on management's current beliefs, expectations, and assumptions, and actual results may differ materially from those expressed or implied. With that, I will now hand over to Darius to walk you through the key strategic highlights.
Good afternoon all, and thank you for joining our results call. Over the first 6 months of 2026, we sustained strategic progress and consistent financial performance with key highlights as follows. First, our adjusted EBITDA reached 307 million euros, representing a 2% year-over-year increase. Second, we continued our disciplined green capacities portfolio delivery with 2.1 gigawatts of installed capacity and 0.6 gigawatts of assets under construction. Additionally, after reporting period, we added further 0.1 gigawatts to our portfolio under construction as we made final investment decision for Tume battery energy storage system of 107 megawatts and 215 megawatt hours in Latvia. Third, we preserved a stable balance sheet with net debt to adjusted EBITDA at 3.5 times and reaffirmed BBB+ credit rating from S&P after reporting period. Last, in line with our dividend policy for the first half of 2026, we intend to distribute a dividend of 7.4 euro cents per share, representing a 3.1% increase year-over-year. Now let me go through the strategic progress over the reporting period. First, the progress of our green capacities projects under construction. Currently, we have 6 projects under construction with total capacity of 0.7 gigawatts and investments of 422 million euros. The portfolio includes 1 solar farm, 1 hydro expansion project, and 4 BESS projects. To start with 174 megawatt Tume solar farm in Latvia, we have already invested 87 million euros out of total 106 million euros. The project is progressing on track with 134 megawatt of solar panels already installed. Once completed, the project will be capable of supplying green capacity to up to 85,000 households annually. Next, Kruonis 110 megawatt pumped storage hydroelectric power plant expansion project. We have already invested 109 million euros out of total 150 million euros. The project currently is 82% completed. All penstock segments have been manufactured and delivered to the construction site. The lower plant, the main components including distributor, stator and rotor have been pre-assembled and their tests successfully completed. Concreting works in the site are near completion, after which the pre-assemblement components will be installed in the place. The project will increase the plant's total capacity to 1.1 gigawatts and significantly improve the flexibility and reliability of Baltic energy grid. Now our 4 BESS projects under construction, starting with 147 megawatt and 295 megawatt hours Kelmė BESS project. We have invested 18 million euros out of total 63 million euros, supported by 7.5 million euros capex subsidy for the project. During the second quarter, deliveries of all battery units were completed. The project is co-located with 314 megawatt Kelmė wind farm, allowing it to benefit from shared high voltage infrastructure. Moving on, 99 megawatt and 199 megawatt hours capacity Kruonis BESS project. We have invested 13 million euros out of total 47 million euros, supported by 5 million euros capex subsidy. During the second quarter, deliveries of all battery units were completed. As a standalone project, it will unlock up to 1.1 gigawatt of flexibility through operational synergies with Kruonis pumped storage hydroelectric power plant. Next, 45 megawatt and 90 megawatt hours Mažeikiai BESS project. We have invested 6 million euros out of total 21 million euros, supported by 2 million euros capex subsidy for the project. During the second quarter, deliveries of all battery units were completed, and after the reporting period, deliveries of all inverter units were also completed. The project is co-located with the 63 megawatt Mažeikiai wind farm, allowing it to benefit from shared high voltage infrastructure. Finally, 107 megawatt of 215 megawatt hours Tume BESS project. After reporting period, we made a final investment decision for it. For co-locating Tume BESS with our 174 megawatt Tume solar farm, which is also currently under construction, we are maximizing the project's efficiency through shared grid infrastructure and unified connections. Together, these assets will deliver the flexibility and stability required to power a resilient, renewable future across the Baltics. As of now, all projects are being implemented on time and within budget. Turning to our sustainability performance, over the 6 months of 2026, our net green share of generation increased by 20 percentage points to 84%. However, our electricity generated decreased by 23% to 1.7 terawatt hours. The decrease was driven by lower generation at Elektrėnai complex, as the total volume of balancing capacity services provided in the first 6 months of 2026 was lower compared to the first 6 months of 2025. Looking at carbon intensity, our scope 1 and 2 decreased by 21% as a result of lower electricity generation from natural gas at Elektrėnai complex. Next, our greenhouse gas emissions. It amounted to 2.7 million tons of carbon dioxide equivalent, representing a 4% year-over-year increase. This increase was driven by higher Scope 3 emissions, mainly due to increased natural gas sales, and higher Scope 2 emissions resulting from cold weather and higher grid losses, partly offset by lower electricity generation at Elektrėnai complex due to the lower need of balancing capacity service level. Lastly, on our safety, safeguarding the health and safety of our employees and contractors is among the group's highest priorities. However, during the reporting period, we had one fatal contractor incident. We are committed to take every possible measure to prevent such tragedies in the future. Our employee TRIR has improved and amounted to 0.48, while contractors TRIR increased to 1. With the strategic overview complete, I now hand over to Jonas for financial update.
Thank you, Darius. Let me start with our financial highlights of the first 6 months of 2026. Adjusted EBITDA grew by 2% year-over-year and reached 306 million euros, driven by stronger performance in networks and customers and solutions. Adjusted net profit decreased by 21% and amounted to 116 million euros, mainly due to higher depreciation and amortization and lower financial activity results, which offset the adjusted EBITDA growth. Our investments decreased by 11% year-over-year and amounted to 306 million euros, with 68% allocated to networks and 26% directed to green capacities. Return on capital employed decreased by 1.9 percentage points, mainly due to the lower adjusted EBIT in green capacities. Our net debt amounted to 1.9 billion euros, remaining largely unchanged, supported by proceeds from the sale of 49% stake of Vilnius CHP. As a result, net debt to adjusted EBITDA remained stable at 3.5 times, and our FFO to net debt improved to 22.2%. Additionally, after the reporting period, S&P Global Ratings reaffirmed our BBB+ credit rating with stable outlook, confirming our strong financial position. Finally, in line with our dividend policy, for the first half of 2026, we intend to distribute a dividend of 70.4 per share, which is 3.1% higher than last year. Let us now review our key performance indicators, starting with adjusted EBITDA. Firstly, green capacities decreased by 10% to 149 million euros, driven by lower captured price and volume. Secondly, networks grew by 15% and amounted to 147 million euros, mainly due to higher RAB as a result of continued investments into our electricity network. Thirdly, reserve capacities decreased by 11% to 18 million euros, mainly due to lower result of balancing capacity services. And finally, our customers and solutions EBITDA amounted to 0.2 million euros, and the growth was mainly supported by higher volume sold, lower imbalance costs, and profitable one-off natural gas wholesale transactions. Turning to segment-level EBITDA performance and starting with green capacities, the main drivers behind 10% year-over-year decrease were, firstly, a lower price captured by our green generation assets, especially on the hedged part, where, as expected, our hedge price decreased from 130 euros last year to 82 euros this year. Secondly, due to a very cold winter, we have had very low wind speeds in the first 6 months of 2026, which resulted in much weaker generation in our wind farms. However, the decrease was partly offset by lower OPEX due to higher spending on development projects in 2025. Now, the network segment. 11% growth in networks EBITDA was mainly supported by a higher regulated asset base, which increased from 1.8 to 1.9 billion euros and was driven by continued investments into electricity network. Weighted average cost of capital remained stable at 5.74%. Next, reserve capacity segment. The segment posted 38% year-over-year decrease, which was mainly driven by lower results of balancing capacity services as the market matures and planned major overhaul of Unit 7 at Elektrėnai complex. And finally, customers and solutions. Adjusted EBITDA amounted to 0.2 million euros, driven by both better results of electricity and natural gas. On the electricity side, results were better due to higher sales volumes and reduced imbalance costs. On the natural gas side, due to higher volume sold and profitable wholesale transactions. Having reviewed the segment's results, let us now turn to our investment activities. In the first 6 months of this year, our investments amounted to 306 million euros and were 11% lower than last year. The reason behind this decrease was lower investments in green capacity segment, as 6 projects reached COD in 2025. However, the decrease in investments in the green capacities was offset by higher investments in the networks, where we invested more on electricity distribution, maintenance, and expansion. Turning to free cash flow, it amounted to positive 5 million euros as adjusted EBITDA fully covered our investments. Also, it is worth to mention that asset rotation result is not included in the free cash flow calculation. Let us now review our leverage metrics. At the end of the first half of 2026, our net debt amounted to 1.9 billion euros, remaining largely unchanged. At the same time, our main credit metric, FFO to net debt, improved to 22.2%, supported by an increase in FFO. Net debt to adjusted EBITDA remained stable at 3.5 times. Finally, let us now look at our guidance for full year 2026. Following the first 6 months performance, which was in line with our expectations, we reiterate our full year 2026 adjusted EBITDA guidance of 550 to 600 million euros and investments guidance of 590 to 690 million euros. With that, I will hand over to Darius for the concluding remarks.
Thank you, Jonas. Let me briefly summarize Ignitis Group's performance during the first 6 months of 2026. Over the first half of 2026, we marked a sustained strategic progress and consistent financial performance, with key highlights as follows. First, our adjusted EBITDA reached 306 million euros, representing a 2% year-over-year increase. Second, we continued disciplined green capacities portfolio delivery with 2.1 gigawatt of installed capacity and 0.6 gigawatt of assets under construction, additionally adding 0.1 gigawatt to assets under construction as we made final investment decision for 2-man battery energy storage system of 107 megawatt and 215 megawatt hours after reporting period. Third, we preserved a stable balance sheet with net debt to adjusted EBITDA at 3.5 times and reaffirmed BBB plus credit rating from S&P after reporting period. Fourth, in line with our dividend policy for the first half of 2026, we intend to distribute a dividend of 70.4 euro cents per share, representing 3.1% increase year-over-year. And lastly, we reiterate our full year guidance for 2026. We expect adjusted EBITDA to be in the range of 550 to 600 million euros and investments between 590 and 690 million euros. With that, thank you for joining today's call. We appreciate your time and continued interest in Ignitis Group.
Thank you to our speakers. We will now open the floor for questions. Our first question is, could you please provide a bit more color on a sharp drop in balancing capacity service volumes in reserved capacities in Q2? Was it due to increased competition, unfavorable spark spread, or else?
Yeah, so in reserve capacities, indeed, we had a worse quarter than a year ago. But we need to remember that last year we have had just entered into completed the synchronization of continental Europe. So naturally, there was more volatility in the balancing capacity market. Hence, the results of these facilities were better. This year, the market has already normalized due to both more market participants entering the market and also existing participants getting more familiar with how the market operates. That being said, just a reminder, reserve capacities is essentially a downside protected option to benefit from volatility in the market. So one quarter doesn't mean that the results will continue on the lower level. But yes, we need to acknowledge that the balancing capacity market is becoming more competitive, and we cannot and we did not expect prices to remain at last year's levels.
The second question we received is as following. Could you please give us your take on the legislation changes related to the prosumer regulation model, the net metering seemingly winning against the net billing model? How much does the new regime change expectations that losses in that part of customers and solutions business segment will be dramatically cut?
Yeah, so indeed, the decision was to keep the net metering model in place, but at the same time introduce additional fees for both prosumers and the regular customers to cover the negative impact that prosumers are having. In terms of our expectations, we think that that the legislation, which has been already passed, will cover around 60 to 70% of the losses which we are currently suffering. So there will still remain some part which we'll try to address through pricing decisions on our side. But the bottom line, we expect around 60 to 70% of losses to be covered by the change in the legislation.
Next question we have is, could you please elaborate on the relatively muted EBITDA improvement in customers and solutions segment during the Q2 despite visibly higher revenues? It would be great to get an approximate EBITDA breakdown between the gas and electricity businesses within this segment.
Yeah, so in Q2, we are starting to see the negative impact of prosumers, because that's when the bigger solar generation starts. So that happens every year, and in 2026 it's not an exception. Prosumer impact is still at 100%, because we are not yet accounting for the positive impact from legislation which we just discussed. So in short, prosumers are the main driver of muted EBITDA improvement.
Next question. Green capacity saw adjusted EBITDA increase by 9.8% year-over-year to 62.9 million euros in Q2, despite just lower revenues. The increase was mainly related to lower operating expenses for new development projects. I wonder if this new run rate, mostly hidden under other operating expenses in the segment, is something we can extrapolate going forward.
Yes, so we are already starting to see the first results of our operational efficiency program, where we are trying to focus on the best projects that we have, and limit our development expenses on less promising projects. And indeed, going forward, the current run rate is more accurate than what we've seen last year.
The following question. Could you please give us a hint about when one can reasonably expect some kind of clarity on the Kronia Nord offshore wind farm?
Yes, so on Kronia Nord, we are working towards obtaining the construction permit in 2027, and the further decisions would be expected after that.
Next question. What were the factors driving low production from wind apart from lower wind speeds in Q1 and Q2?
Yeah, so in terms of other factors, I mean the wind speeds are the main one. We did have some maintenance, longer maintenance periods for for one of our wind farms in Mažeikiai, but the main driver by far is lower wind speeds.
Next question. What was the cost of electricity purchases to cover low production from wind in Q1 and in Q2?
So I think on this one I don't have the details in front of me. We can follow up directly after the call through our investor relations team.
One more question. What is the situation in the balancing capacity market? Can you share year-over-year profit development in the market?
Yeah, so on the balancing capacity market, I think we covered that on the reserve capacities part, and just to recap, we do see the decrease in profit from balancing capacities because the prices for the services are lower due to new assets participating in the services, and then the existing participants being more accurate and more capable to provide their bids. That being said, we are also benefiting from this situation because on customers and solution side, we are suffering lower imbalance costs, and also on the renewable side, we are also suffering lower balancing costs. So all in all, it's still a negative for us, the decrease in market prices, but we do have some positives, and also this decrease is not unexpected for us, and that was foreseen when we provided the guidance for the year.
The following question. In your fact sheet, Mažeikiai wind farm generated 9.4 gigawatt hours in Q2 2026 versus 33.3 gigawatt hours a year earlier. A load factor of 6.9% against 14 to 15% at your Kelmė parks in the same market and quarter, and a 28% historical average for Mažeikiai itself. Wind resource alone doesn't explain the gap. What is an outage or a curtailment issue or something else? And is it resolved?
Yeah, indeed. So when I mentioned this longer maintenance period for one of the wind farms, that indeed was Mažeikiai, and in that particular wind farm, due to reoccurring cable faults, we have decided to undergo a more substantial maintenance for the cables, replacing parts of them, and that was and then we decided to do it during the low wind season, and expect to fully complete it by the start of high wind season. So essentially in Q3.
One more question. Adjusted return on capital employed is 6.7%, down 1.9 percentage points, and the ownership expectations letter sets a floor of 6.5%. Your own 2026-2029 target is an average of between 6.5 to 7.5%. What gets you back above the midpoint, and by when?
Yeah, so in terms of adjusted ROCE being declining, that is of course not ideal, but what I can say is that we do intend to stay within our target range of 6.5 and then 7.5.
One more question. Would it be possible in the future to report separately power and natural gas results within the customers and solution business segment?
Thank you for the remark. We'll take that into consideration, and we'll consider the suggestion.
The following question: could you give us some color on refinancing efforts of 2026-2027 bonds? When could investors expect more news, and does the company consider hybrid bond issuance?
Yeah, so you are right. We do have the 300 million bonds maturing in the middle of 2027. I will not comment on the precise plans in terms of specific transactions, but naturally we do intend to refinance these bonds ahead of their maturity.
One more question. What loss on prosumers do you expect in 2026? What year-over-year impact do you expect from the updated prosumer regulations in 2027?
So in terms of 2026 prosumer impact, so last year we had close to 30 million of negative EBITDA from prosumers. This year, naturally, because number of prosumers has increased, we would expect somewhat higher negative impact from them. And in terms of going forward, as I mentioned before, we expect, due to new legislation, around 60 to 70% of that negative amount to be covered.
We have no further questions. Thank you for joining today's call. Our investor relations team remains available for any follow-up questions. We look forward to speaking with you again next quarter. Have a great day.